Hello and welcome to today's A-Team Group webinar on getting ready for Sustainable Finance Disclosure Regulation, or SFDR, and ESG. Are asset managers ready? Now that's what we'll be discussing and finding out through this webinar. My name is Sarah Underwood. I'm an editor at A-Team Group and will moderate the webinar. Our expert speakers today are Jean-Pierre Gomez, Head of Regulatory and Public Affairs at Societe Generale Securities Services, Vanessa Barnett, Senior Vice President and Global Head of Environment, Social and Governance at FactSet, and Adrian Wellen, Senior Vice President and Head of Regulatory Intelligence for Investor Services at Brown Brothers Harriman. I'll ask them to introduce themselves in just a few minutes, but first, as you're taking part in the webinar, to the right of your video screen, you should see a panel which shows questions and polls. We'll be running 3 audience polls through the webinar today. So please do take advantage of putting in your answers so that we can gauge where things are at and where the issues and the successes are. You can also use the other part of that panel to ask questions to our experts. Please ask those as we go along, and I'll try and insert those into the conversation as we go. Fantastic, that's about it on that. So please let me come over to our speakers. And Jean-Pierre, please introduce yourself and tell us a little bit about your interest here.
Yes, good afternoon. Thanks, Sarah. I'm Jean-Pierre Gomez. I'm Head of Regulatory and Public Affairs, as you said, for Societe Generale Securities Services. I'm French and I'm based in Luxembourg. My role is to do some regulatory watch and, of course, contribute at European Commission and at European Parliament. For instance, during the MiFID II process, I was representing Surgeon at European Parliament with Marcus Ferber. And for regarding the green finance, of course, I've contributed to many working groups at the level of European Commission, and I represent SocGen, Societe Generale Securities Services, regarding all the regulation directly or indirectly linked to the green finance.
Lovely. Vanessa, let's hear from you, please.
Great. Hi, everyone. I'm Vanessa Barnett, and I am the head of ESG content strategy here at FactSet in New York City. So I look after our ESG data sourcing, whether that's through partnerships or our own internal content collections. And right now we are really particularly focused on building out SFDR solutions. So I'm very happy to be here today to talk about some of what we're doing and specifically what we're hearing from our clients.
Thank you. And Adrian.
Thanks, Sarah. Yeah, my name's Adrian Whelan. I'm Head of Market Intelligence for Brown Brothers Harriman. I live in Dublin in Ireland, but I have a global remit. So I help our clients with regulation and distribution trends, and quite obviously ESG and everything in the sustainability area is a huge area of focus at the moment. I also sit on our executive sustainability board for Brown Brothers, and that's how we operate in our community and run our business sustainably. And again, it's probably our #1 agenda item as we enter or try to come out of this pandemic in particular. So very happy to be here today.
Excellent. Thank you all very much indeed. And let's get on with the Q&A. But first, let's run a quick audience poll question, which asks, what's the importance of establishing ESG strategy at your organization? And while you think about what your answer to that will be, let me come to you, Jean-Pierre, to set the scene and talk a little bit about the levels of interest you're seeing in ESG. Why is it so popular, and will interest hold up? It really has been a huge acceleration over the past few years. How do you see it?
Yes, correct. Yeah, we see a higher consideration of sustainable investment. Green is everywhere, not only in Ireland. Initially, green investments was largely considered as, I would say, a nice to have and rather niche. And however, extra financial data, especially with the non-financial reporting directive, extra financial data has become as important as traditional financial data. And we have moved, I would say, from a situation where ESG data was more a green marketing tool, okay, for asset management clients to an SFDR requirement. We see with Vanessa about the SFDR requirement for them to include in periodic reports. This means that the process of compiling and disclosing ESG data has had to change in order to comply with regulatory standards required by the European regulators. This is one of the main reasons why the European Commission has decided to set up two regulations, SFDR, and also what we call the framework regulation, the so-called taxonomy, to classify economic activities with an obligation to consider one of the 6 environmental objectives of the taxonomy, but without the objective cannot significantly harm one of the 6 others.
Okay, yeah, that's always going to be a challenge. Vanessa, how do you see things developing? You're working with a client base of interested parties, no doubt. It has been a fast acceleration.
100%. I would say really ESG comes up in almost every client discussion, many of them regulatory related right now, but also because asset managers just in general are really focused on integrating ESG factors into investment strategies, excuse me, across the board. Of course, this trend has been rising for many years, but I think it's very telling that assets invested in just ESG ETFs globally shot up past $100 billion last summer. And I think this stems from investors, certainly regulatory, so as Jean-Pierre says, but I also think investors feel the impact of these systemic risk factors like the pandemic and climate change on a very personal level, as well as they're seeing it across the whole economy. And so I feel that there's really keen interest in investing in companies that are building strategies to mitigate these risks, right? And I think most importantly, investors are directly now tying these non-traditional factors to financial performance. And they're actively engaging with companies to encourage disclosure and really kind of building ESG strategies into the core of their operating models. So this is, of course, with the aim of longer term profitability. So in the end, I honestly don't think we're that far off from ESG investing just simply being the norm and something that you opt out of rather than opting into. So here to stay. Okay,
that's great. Adrian, what would you say there?
Yeah, like I'd be obviously in agreement with the prior comments, but I think, asset management trends are normally just reflective of wider society. And this is just another one. There's an expectation just in general society, and demographics play a little bit, and that drives capital markets, that we don't just exist for our own purpose and we don't just exist to make money. So non-financial measures are important. And that's what investors are looking for. That's what regulators are driving towards, but also your own employees. No one wants to work in finance if it's not going to have a purpose and a place in the world. The big thing as we look at SFDR and the European initiatives is that it drives ESG from what was previously voluntary and self-defined to mandatory and prescriptively defined. And that's the biggest shift as we look into some of the boring stuff into the regulation. And everybody was doing this for in some way, shape or form for a number of years. But being ESG compliant is not the same as being taxonomy aligned or SFDR compliant. And that's why ESG really is everywhere. And it very much is here to stay, starting with the epicenter in Europe. But this is a global shift. And if anybody's looking and is still not convinced, I think you'll be convinced by the end of this 50 minutes.
Okay, that's great. Can we see the poll results, please, from that first audience poll? Well, I think, Adrian, your point is borne out. Is that what you'd expect to see?
It is what I'd expect to see, to be honest. It is very important. And again, it's a multi-stakeholder importance. Nobody will want to work for you unless you integrate ESG. No one will invest in you if you're not thinking about sustainability and the future. And your regulators will come for you on a negative tone if you do not comport with these escalating and rising standards and rules. So I don't think anybody here will be surprised to see that 62% at the top.
Thank you. Would that be your view, Vanessa?
Oh, absolutely. I mean, it's what we're hearing every day and talking to clients, and yeah, so not surprising.
Okay, that's great. Good to hear that such a great interest in what we're talking about, indeed. And Vanessa, let me stay with you, if I may. And the the EU Sustainable Finance Disclosure Regulation, or SFDR, its key requirements. Tell us a bit about that and where it falls short.
Sure. So, at its heart, the EU, as Jean-Pierre was saying just previously, they're enacting specific regulation to help redirect capital into assets that are well positioned for long-term growth. And this is growth in a future that is more socially equitable and fingers crossed has achieved net zero emissions. And so the regulation is really there to help investors understand which investments do meet the EU's criteria. And as Adrian was saying, this is very prescriptive for sustainability, and disclosure is required in order to inform investors. And so that's what the SFDR is really all about. So there are three main pieces to the regulation. I'm going to hit this at a very high level. There's tons of nuance, and I'm sure Jean-Pierre can add in a lot more, but at a high level, the first part requires disclosure just in general about how asset managers are factoring sustainability risk into their overall investment strategies, just doing their fiduciary duty. And that's in effect today. The second piece of it really focuses on how asset managers, through all of the financial products that they offer, how they're having an impact on the environment and some social issues. So that's called the principal adverse impacts. And the EU has defined a very specific set of indicators to measure those adverse impacts, largely in monetary terms. So starting with the individual holdings, those indicators have to be aggregated all the way up to the asset manager level and disclosed annually and kind of tracked over time. And then the third part is about funds that are specifically being marketed as sustainable. And they have additional disclosure requirements that really are there to help investors be assured that the products that they're investing in that are labeled as ESG or sustainable, really are and are meeting those sustainability goals. So of course, this is to prevent greenwashing. And then as Adrian was saying, this is where the EU taxonomy comes in as a description of what it really means to be sustainable across a very wide set of industry sectors. So whether you're in cement manufacturing or in agriculture, there's pretty granular descriptions of what it means to be sustainable if you're carrying out those economic activities. So it's a pretty high bar. In terms of falling short, I think there are all sorts of timing issues about when specific pieces of the regulation, especially around disclosure, are coming into effect. And that's, a real big issue in terms of the data and the fact that very key pieces like the RTS of the regulation are still only in draft form. One other thing I just wanted to call out quickly is with the principal adverse impacts. Right now, it is at the asset manager level, and most people that I'm speaking with think that that doesn't really make sense, that it needs to be at the product level. And I believe that that's coming, but I think that falls short right now.
Okay, thank you, Vanessa. Jean-Pierre, what would you add to that?
Yeah, well, thanks, Sarah. Thanks, Vanessa. I don't have a lot to add, but a lot of things to add. But just wanted to clarify things that, for example, SocGen as a security services, we are a service provider, so we are not impacted by SFDR, not as a custodian, not at a fund administration, not as a depository. However, our clients are impacted. Of course, we'll see later on what would be the role of the depository in terms of controls, in terms of compliance, and so on for FCDR. So our clients are impacted. When I say our clients, the management companies, for example, funds, and Vanessa mentioned that you have financial markets participants are impacted at two levels: at the level of the management company as an entity level, and at product level. So when you sell a financial product, you need to comply with SFDR. So far, we have a level 1 of the regulation, and level 1 means that you have to update prospectus, for example, of funds, marketing documents. So it was a description of your sustainability or policy, your risk, and so on. That's for the time being level 1. And level 2, what we call level 2, it's the RTS, the Regulatory Technical Standards. We had a final version in February. However, the final draft is not the final draft because the European Commission was supposed to endorse the final draft published in February by the ESAs, the 3 authorities, ESMA, EIOPA, and EBA. And in the meantime, they were supposed to endorse the final draft by May, beginning of May. But in fact, it's not clear. But the RTS are not so clear, so we are looking for clarification from the market and so on. So the ESAs launched a new consultation paper in March. Replies have been received up to the 12th of May, and we expect a new final draft by maybe end of the summer. So probably there will be a delay in the publication of the RTS, the final draft of the RTS, and the deadline. It was planned to have the entry to force of the RTS in January 2022, and probably this will be delayed in the future. But what I would like to add something which is very important. In SFDR, you have 2 articles, Article 8 and Article 9. Article 8, it's, for example, you look at ESG characteristics and you have to say whether you really promote sustainable investment. And Article 9, it's where you have a sustainable investment as an objective, right? Most of the funds are comply with Article 8, but you have small funds, few funds, 3%, because we had an analysis made by Morningstar, and Morningstar that in Europe, 20% of the fund industry comply with Article 8, right? And only 3% with Article 9. So that's the situation today, coming from the analysis made by Morningstar.
Okay, thank you, Adrian. Bringing you back in here. Obviously, Brexit caused a whole new raft of regulation. How do you see UK ESG regulation panning out, and how different do you think it'll look to the EU regulation in terms of SFDR?
Yeah, so what's important is that Brexit has happened. So the UK had choices to make around the split, and as it pertains specifically to SFDR and the taxonomy, not surprisingly, the UK have chosen to diverge, and that is very important for 2 reasons. So the UK will have a different rule set around ESG than the EU, yet UK asset managers and banks will continue to work and operate, market and sell in the EU. So if you are a UK asset manager or bank, it's funny, you got the worst of both worlds, because you will have to still comply conceivably. If you have European products or customers, you will have to comply with the EU taxonomy and SFDR and anything else that comes in between, while dealing with a UK-centric or specific rule set. The UK has chosen to diverge. I think when you look at Rishi Sunak, when you look at any of the policy debate that's going on in the UK at the moment, it will look slightly different. But funnily, they want to leverage the same scientific-based approach as the EU, but have their own UK taxonomy. So you could end up with a little bit of confusion around the UK taxonomy, and the EU taxonomy is one thing. The other thing that I think will happen is that they're going to leverage, this is probably a positive for the UK, it's going to be more focused on climate and the E than the ESG. So they're very focused on the green element, the climate element. And TCFD standards continuously get referenced. And why that is actually good is that one of the complexities that we might speak about again in the EU is this concept of double materiality. So if you do good for the environment, you also have to look at the S and the G elements, that you haven't done any significant harm to those. The UK divergence means a little bit of confusion, but the UK only rules, I think, will be simpler, less complex, more focused on the E, slightly more blunt instrument, but easier to manage. And I'll actually open it up again. I think the US is going down that path as well, that the US to begin will go and focus on the E primarily and not so much on the S and the G as a collective. So the concept of wider sustainability. And that makes it somewhat easier. But what we're going to see is if you are in scope for SFDR, EU taxonomy, etc., if you can deal with those, if you can comply with those, they're the highest bar. And all the other global regulations, divergent or otherwise, will fall off the benchmark that the EU. So again, there's good and bad news contained in what I'm saying, but just to end, if you can comply and integrate SFDR and taxonomy standards, you shouldn't be afraid of anything else that happens globally in the ESG regulatory space.
Okay, thank you very much indeed, Adrian. And I'm going to stay with you and ask you how you see the key challenges of compliance and ESG regulations for asset managers. Obviously, as we said earlier, some have been doing this for some time. It's new for others. What are the sort of key challenges of getting this right?
Yeah, so the key challenge, I kind of alluded to it, and we're in an Olympic year, right? And one of the events I always look at the Olympics is the high jump. And interestingly, I've been using this analogy. The EU with SFDR have set the high jump bar, even for new entrants into the competition, extremely high. And one of the criticisms is there's no proportionality. So whether you're a boutique, small asset manager or the largest bank, you have to comply. And SFDR for ESG policymaking sets almost a world record standard, and everyone is expected in round one to jump over that. That's the real challenge, okay? It's hugely complex. It's supply chain management, it's climate science, it's so many different things wrapped up in these regulations. And SFDR taxonomy, there's CSRD, which is corporate disclosures, there's the green asset ratio for banks, there's integration into MiFID, into UCITS, into AFMD. ESG is everywhere in European regulation. So that's the complexity. The other complexity is the fragmentation. So we're going to have an EU version, a UK version, an Asian version, a US version. And for most firms now have globally dispersed models, even small ones, have customers or product in a couple of territories. So the fragmentation is difficult. And I'll leave you on one more difficulty, which is interesting. Audit and assurance of these rules is really interesting to me. And not a lot of people are talking about it, but audit and assurance of financial products is really important. It's why the audit process is so tight. It's why the big four firms and others, are so important as key stakeholders. The EU taxonomy provides non-financial data assurance, climate science assurance that the traditional audit and assurance firms just have never really been in this space. And it's not to be critical, it's that it's an immature space. There are then kind of boutique experts at these things, but they've never worked with global large banks. So you're going to actually start seeing new partnerships, and the new partnerships for audit and insurance will be climate scientists, as well as risk managers, as well as capital allocation experts, all in this kind of new kind of stakeholder capitalism. And that's the one I find most interesting, that asset managers previously were pretty good at risk return analysis. But as we move into this non-financial measures of success, you're going to have to be so much more. And then the last thing that I will say about it is it's as much a risk management exercise as it is actually a marketing exercise. People need to be conversant in these details. They're going to have to talk to regulators. They're going to have to talk to their clients. They're not going to be experts themselves in this deep technical assessment. So again, you're going to have multiple skill sets, and some of them are not ones that we've had to deploy. So that's what I love about it. I think that's the excitement. I think this could be actually the savior of asset management, particularly active asset management. And people will pay a premium price if you have good risk returns, if you're integrating a better society. And again, there's a question mark around whether ESG can truly drive outsized returns. But again, increasingly, there's a bank of evidence that shows it can. So again, it's very exciting, very fragmented, very complex. But I would finish on a high note. I think ESG really is a positive driver for the entire asset management and banking industry.
Okay, Jean-Pierre, what would you say there in terms of the challenges for asset managers?
Yeah, the challenges are very clear for me. On one hand, we have this wish of the European Commission to foster sustainable investments with those two very important regulations, taxonomy and SFDR. And on the other hand, you have a series of regulatory measures under review already in place with different deadlines to comply with. And you need to coordinate all those legal texts and reports between each other through a sort of gap analysis and find synergies in order to avoid, for example, developing costly and contradictory IT programs, duplicate an inefficient workload for the same financial product. Adrian mentioned non-financial reporting directive, which became the corporate sustainability reporting directive, and you have the climate law, the benchmark regulation for climate indices, and so on. And you have to make a mixture of everything to provide the same reporting using the same data. And you mentioned also, Adrian, the TCFD reporting, which is not compulsory. Don't forget that the Task Force on Climate-Related Financial Disclosures has been created by the Financial Stability Board in 2015, and it will become compulsory in 2025. So we don't have a legal framework. However, I know that in the United Kingdom, listed companies are keen to provide this information, this reporting, because the FCA said apparently that listed companies are obliged to publish this TCFD reporting. However, when we meet our asset managers in France or in Luxembourg, in continental Europe, we ask them, would you like to provide SFDR reporting? And they say, yes, but we'd like at the same time provide the same information, so the TCFD. But the regulation today is SFDR and in the future taxonomy. So that's where, for me, the challenge, because in short, you have to consider all the regulation. And we have many regulations, okay?
Okay, that's great. Let's dig into it a little bit now. And in a moment, we'll talk about some of the data management sourcing problems. But first, let's run another audience poll. And the question this time is, what are the data sourcing and data management challenges of ESG strategies at your organization? And you can tick as many of the boxes as you like, because I suspect you may have more than one challenge. And let me come to Vanessa while you tick the boxes to talk about the data sourcing, data management, and data integration challenges of compliance with SFDR and ESG and investment in a more general spaces and how they can be resolved.
So there's a lot there. Let's start with data sourcing. As Jean-Pierre and Adrian brought up, right? This lack of disclosure it's a huge issue. I think we are seeing more and more disclosure, and it's on a very much an upward trajectory. So that's the good news. And the other thing that really data providers in general, including FactSet, are really focused on now is proxy data. We're trying to find the best type of solution to fill the gap between now and what's likely to be a number of years before regulation really starts hitting at the corporate level. So that's a pretty big deal. From our clients' perspective, we're really seeing that they're looking to source data from a number of vendors because there aren't that many one-size-fits-all type of solutions out there. And, it is a challenge to really integrate data in to make it actionable and work well together when you're working with a number of different sources. So the two big ones, I think, are concordance and really mapping entities across the different data sets and harmonizing the data and making sure that this field from this vendor really equates to this particular PAI metric, for example, or the other. Honestly, I don't think these challenges are all that different from many other types of data challenges, but with SFDR in particular, we really have to focus on how these data sets are being integrated with holdings data and also looking at methodologies. This is a huge issue that we're working with many clients on. And when it comes down to methodologies, it's really about, how are you then mapping things like industry classifications to the EU taxonomy. So FactSet in particular, we've been working with the EU Commission on a working group to map our RIBIX codes into the EU taxonomy. But even then, to look at this at a vast scale across all investable assets, there's really some challenges there. And I think for many clients, they're trying to figure out, are they looking to sort of outsource that methodology or take on that challenge in-house? And just as a few points, some of the things we're seeing, like some of the activities don't really represent well in terms of revenue generation, like restoration of wetlands and afforestation. And then in some cases, you have sectors that are applying to multiple activities, like process plants and utilities and energy. So, there's a lot of work that's going into how do you correctly apply this data to the regulation and come out with something that's defensible. So those to me are really encapsulate the biggest challenges.
Okay, that's great. Jean-Pierre, what would you add in terms of data management integration challenges here?
Yeah, for me, what is important is the lack of data to deal efficiently with ESG factors. The lack of data is not only for private assets. For example, we know that for private equity or property funds, because all funds are impacted by SFDR, the taxonomy applies to any type of financial product, okay? Even if you don't consider ESG factors, so you have to integrate them as a fund, whether private equity or property fund. And in other words, how to ensure or guarantee that a company or investment is 100% ESG compliant if you don't have the data, right? That's the first thing. The second one is there are no universal ESG standards, okay? There is not one definition for what ESG is. So how do you implement, for example, ESG policies in securities lending, right? As there is no fixed or widely accepted internal accepted standard, ESG data can be used subjectively by developing ESG principle. So that's the main. And the solution to speed up the process and complying with SFDR or the taxonomy or any green finance regulation will depend how fast the standardization of ESG factors will be set up. That's my position on that.
Okay, that's great. Let's look at the poll results, if we may. There we have it. Jean-Pierre, just as you said.
Yes,
accurate and timely data.
Yes, and Sarah, if I may add something, that of course, when we are discussions with data providers like MSCI, for instance, MSCI is very well known, but MSCI cannot create the data. If I invest in SocGen or if I invest in a company, but the company does not publish any information about ESG factors, MSCI will not be able to create the data. Okay, they will have to rely on the data published by the companies, by large companies. All right, and then once you have the data, it's not enough. You need to calculate the KPIs. You need to calculate the PAI factors. Right. So it's not only having the data, but afterwards you have to use the data. And depending on the methodology, integrates this data in your system to provide the reporting. Okay, so the data is not the end of the process.
Okay, Vanessa, anything to comment on that poll result?
Again, not surprising, and we're really getting into the heart of many companies have realized that they need to do this, right? So I feel like we're pretty far along in the process at this point, and so those results do not surprise.
Okay, and sticking with you, Vanessa, Jean-Pierre highlighted the need for standards a moment ago, and they obviously appear to top on the poll. What would you say standards will do? How will they help? Are they really being nurtured, and will they be implemented?
Well, there is huge emphasis right now on developing standards, and I think there are some clear front runners out there, but so much is unknown. I think just starting back to some of the points that Jean-Pierre was just making, for many companies, starting to report can really be daunting. Even very basic data like calculating your scope 1 and 2 greenhouse gas emissions, that's as much art as it is science to a certain extent. There are formulas and we're trying to get those definitions and really understand, how do you calculate the number of vans that a company has, et cetera, all the way down to, of course, bigger companies in the consumer space are a little bit further along. But these standards are really, really critical to helping companies to understand how they need to report, what they need to report, what's material, and really ultimately helping us and investors to be able to compare apples to apples. That's really at the heart. I'll just touch on a point that Adrian had mentioned too about this notion of materiality and really helping investors to understand which data points are the most relevant and most financially relevant. I think it's very interesting. So, for a standard like SASB, they're helping both companies to define the metrics that they need to report, and also from an investor perspective, kind of putting a stake in the ground in terms of what is financially relevant material. The other point I wanted to touch on is the IFRS. Now, clearly, this is good news that the IFRS is involved, that the Sustainability Standards Board is really getting going. One of the big decisions that's come out of the review period is about what to concentrate on first, and this debate on whether to just focus on what's financially material or to consider that double materiality of both what's financially material, what's impacting the company, as well as the impact of a company on the environment and on social issues. I personally fall into the camp of do both, because I think both are equally important. But I think the IFRS at this point is still leaning, or if someone knows more, correct me if I'm wrong, but the latest that I had read is they're still leaning towards trying to keep it as simple as possible and just focusing on the metrics that are most financially material. But this is a huge issue.
Yeah, of course, I think it is. Everybody's voicing it, but we don't have a solution yet. So that's still to come. We have quite a few questions that's come in from our audience. So let's take a quick break. And I'm going to put the first one to you, Adrian, because it's about the E, the S, and the G. And it asks, most of the regulatory standards are focused on environmental impacts and investments and carbon footprinting and so on. Is there any trend in making social and governance data more consistent and quantifiable?
Yeah, so it's a great question, and I'll go to the UK and the US, who are looking to frame rules themselves aside the EU version. They have gone maybe to the easy part. The E has proportionally always had a larger focus than the other elements. What the EU have tried to do, the EU actually, when you look through the EU regulation, the legislation, and the industry debate, they don't call it ESG, they call it sustainability. Because the very reason that they want to give them equitable status, they want to say that the social good and the governance that drives investments is as important as the environment. The EU come from a science-driven approach, which suggests that this is not a right-on social movement. This is pure risk management of your capital allocations for the longer term. Other rule sets that focus primarily on climate, or the E, sometimes can get caught up that this is just good for the planet. The EU are fairly, unemotional, if that's a word. They're not emotive about this at all. They really see that this is a calibration of capitalism which can sustain itself into the future. So what we're going to see, I think, again, to talk about divergence, you're going to see for the foreseeable future, most regulation in this space will have the primacy of the E maintained. So it'll be about carbon emissions, et cetera, et cetera. But what the taxonomy does do is looks beyond climate and SFDR. It looks into the social good, employee welfare, philanthropy, other things. The G is as important. Without the G, you can't actually drive better outcomes on the S and the E. And the G is how your board governance is conducted. It could be data management and cybersecurity that protects your firm and your business model. The other thing that the G and the S kind of collide on is again, social inclusion. So the gender diversity debate, which again, just I get on my high horse here, our industry is losing. Social justice in terms of socioeconomic participation in the industry that we're in, we're losing. So there's a lot of these S factors that have not been given the primacy because the E has just taken over, basically. But what the European rules do dictate through double materiality, and it's why Vanessa said she was a supporter, so am I. I don't think you can just bang the sustainability drum if you're only focused on climate change. I'm not saying climate change and environment's not important, but I also think our place in society, investor expectations, employee expectations in the financial sphere looks at employee well-being and societal well-being. And it's all underpinned actually by the really boring stuff is how your business is governed. And it goes back, I'll turn around. This is not about looking good and a PR exercise. It's about getting better risk-adjusted, longer-term returns for your investors, which then, as an offshoot, will have positive consequences for humans and the planet. So again, it's not a right-on social movement. It's very much a shift in capitalism towards true sustainability and looking through the prism of the E, the S, and the G.
Okay, thank you very much indeed. Forceful answer, I would say there, Adrian. One to listen to.
I'm a little bit passionate about that.
Clearly. Let me come to you with this one, Vanessa. We're struggling with data gaps. We talked about proxies earlier. So how can we manage data gaps in the disclosure of ESG data? This is, I think, a fairly constant problem.
Yeah, there's no right answer here. I think everyone is trying to put a stake in the ground to really understand, what other types of data can we gather? What do we know about companies? What can we look from an outside-in approach, right? So what is being said about companies in the news? What kind of signals are we able to find through external data to try to fill in some of those gaps and really understand how companies are behaving, and not just what they're saying or not saying. And so, we feel pretty strongly that having a more timely view, a very comprehensive view globally of what's happening with companies based on ESG factors is a very critical part to all of this. And that's our solution anyway, towards filling in some of those gaps.
Okay, that's great. Jean-Pierre, I'd like to come to you. This is a reasonably technical question. If it's too technical for today, let me know. You mentioned Article 8 and 9 of SFDR and Article 6 and 5 of the taxonomy. And the question says, can the speakers elaborate on the overlap between Articles 8 and 9 of SFDR and 6 and 5 of the taxonomy specifically, i.e. under what circumstances do Article 8 products need to apply taxonomy disclosures? Do you want a minute to think about that while I put another question to one of the others?
Yeah, that's very complicated. The thing is, when you make the link between the SFDR and the taxonomy, Adrian already explained that in the taxonomy, you don't consider ESG, you don't consider S factors and G factors. Taxonomy considers only E for environment, okay? Where, for example, SFDR considers E and S and G factors. That's the challenge. And so far, we don't know how we will be able to match both taxonomy and SFDR. That's a question for the ESAs, and they have to clarify this. Okay, that's the first thing. Just maybe in addition to what Adrian said, I just wanted to make a comment about the sometimes there could be an opposition between the E factor, okay, environment, and the S factor. And many people don't pay attention to that. So there is a need to find a way of balancing the two and ensuring that the E factor creates economic growth and new jobs in Europe without jeopardizing the social ecosystem, okay? Because if you consider only E environment and you don't care about the social, you can destroy jobs, okay? So you have to make an equilibrium, and that's the issue with the taxonomy. The taxonomy doesn't take into account the S factor, all right? Okay, and in addition, you may have, for example, the position of the NCA, the National Competent Authorities, which could promote or prefer some methods and put in practice what we often call golden plating measures, golden plating rules. Okay, so that's how do you want to standardize the process in Europe or worldwide if you don't have a common understanding? The same methodology, the same standardization of E factors, ES factors, and so on. So it's where we are.
Okay. Okay, that's great. We got a long way, as many people have said, but we're still looking for those standards to kind of...
Yeah, it will take time to achieve the European Commission objective regarding sustainable finance. I'm sure about that, yeah.
Okay, fine. Let's get back to our questions. But first, let's run our last audience poll for today. And it asks what third-party services and technologies you're using to underpin your ESG strategies. So while you have a think about that and tick as many of the boxes as appropriate for you, let me come to Vanessa. And please tell us a little bit about the kind of technologies, tools, services that can help asset managers develop ESG strategies, particularly around sort of transparency and disclosure and all the kind of the bits that are particularly important at the moment.
Yeah, I'll hit home one more time on this methodology piece, and Jean-Pierre brought it up as well. I mean, this is where the rubber meets the road and how this data really gets applied. And we are hearing that from a solutions perspective, many clients do want a turnkey solution, one that, you know, for example, applies all the formulas for the PAI and just spits out an aggregated number, or provides a flag that indicates that a company, you know, has X amount of revenue that is aligned with a sustainable activity defined by the EU tax. So I do see a trend across all of our peers in the data provider world moving into this direction. But, you know, for many of our clients, they also need the more basic services. You know, data management services and concordance continue to play a very key role here, and really just put in a plug at the heart of what FactSet really does. I think portfolio analytics and reporting, right? All of this is about, or many of it ultimately, both from PAI and EU taxonomy, is looking at the products themselves, the funds. So it's really important to be able to layer in this data seamlessly with holdings data and being able to aggregate that up and spit out reports. So there's a whole workflow here. You know, some clients are using this in their own systems, their own kind of homegrown environments, or they're looking for hosted solutions. And so we're seeing a lot there. And the last piece I wanted to talk about is corporate engagement, right? Our asset manager clients are continuing to have to really talk to the companies that they're investing in, probably at a deeper level than they have in the past. And so things like in research management systems, internal research notes, being able to flow data, combining external data and also proprietary data that's being collected about companies, I think is really critical, and having all that data then flowing into the portfolio analytics and reporting. So these are really key pieces of the final solution, I would say.
Okay, Adrian, what would you say there in terms of tools, services, solutions? What are you seeing?
Yeah, so the term solution interests me. So I think this is another big data question. Okay, so I think it is predicated on data, but I think it can't live to the side. I think it needs to be part of your wider data strategy and data management process, because again, it infuses multiple areas. The other thing I will say, and there's fantastic ESG providers out there in the market that, you know, be it, you know, you bring that in-house or you have an outsourced relationship, but you absolutely need to have a service, an SME overlay, because the investor is going to call you, say your asset manager XYZ, you're using FactSet. You need to be at least conversant on the data that you're using and the tools you use. because it's the fascinating one bit about this whole dynamic is that the screening tools and the expectations on data are hugely granular, yet the actual disclosures, be they financial statements, be they ongoing disclosures, are subjective and quite high level still. So you're going to have to engage your end user in plain language, even though the calculations are extremely, and the portfolio composition calculations are extremely detailed and complex. You need someone, be it your service provider you're utilizing or someone in-house, that truly can be conversant to the outside world on this. Otherwise, this concept of greenwashing really comes up into play if you have basically outsourced your thinking on ESG to some data provider. So I think everybody, banks and asset managers, need to think about that. How are you going to build up your own skill set, even using third-party vendors, which is absolutely fine, but will you retain a service, an SME overlay to that data that you can converse with your clients plausibly?
Excellent, thank you. May we see the poll results, please, and see what our audience says here. Yep. Okay, analytics and reporting, data services, research ratings, metrics, risk evaluation, and at the bottom, machine learning and AI. Vanessa, what do you say to that?
Well, I would just say, even though machine learning and AI gets a bit of a short shrift here, I see this as being a major force coming in. You know, as Adrian said so well just now, this is a big data issue, and it's not something that can just be managed completely manually, whether it's by, you know, the asset managers themselves or a data provider. So I would put in a bit more of a plug for that.
Okay.
And just briefly, I'll come over the top if I may. I agree with that. I'm not surprised at the lower number, but because the non-standard data and fast-moving data on corporate entities is required for this, I think, you know, scraping of social media, any public pronouncements, that's going to become increasingly a part of your ESG screening. And it can only really be grabbed. There's lots of information out there, but is there usable data? It can only be grabbed and used for ESG purposes through machine learning and AI. So I think if we come back this time next year, I'd imagine that will be higher up the rankings, and would be my bet.
Yep, we'll see.
Yeah.
Next year. Okay, before we come to our final question, Vanessa, can I put another audience question to you? And it is quite specific, and it asks, are there any best practices yet for pricing climate risks into investment decisions and portfolios? And if so, what are they?
Yes, that is a deep question. I think some of it is systematically being priced in. I don't know that necessarily it's something that people have to think about, but the whole notion of climate risk and really assessing risk across portfolios is, I think, sort of at the beginning stages. It's something that we're actively looking to do, and looking at different factors, things like commodities prices and how that's could impact future pricing. I think the big issue here is starting to look more short term and not just at long-term physical risk. It's more about, you know, shocks to the system, how you're kind of modeling how companies are positioned to react in even just over the next 8 quarters, for example. So I don't have a set answer, but I recognize that it is an issue. Again, some of it is already being priced in just automatically, but it's a growing field here.
Okay, lovely. And Jean-Pierre, I have a question, I think, from a friend who asks you directly. I understand that ESG data are not harmonized. How could we consider ESG labels to make business decisions without any regulation on it?
Yeah, that's a good. I don't know. I was expecting this question because we didn't talk so far about the labels. Labels have been very useful for the environment. Okay, initially to facilitate growth and finance in developing countries, microfinance and environment labels were very useful, addressing the importance of sustainability with ESG criteria, and we made a shift to go to the economy of listed companies. However, we have to pay attention. Those labels are not enough for the SFDR reporting. It's not because I have an ESG label that I'm compliant with SFDR or with the taxonomy or whatever. Okay, so those labels if you have the label, you could give the impression that you are doing green marketing. Okay, I've got the label, so it's fine. It's more green marketing. I don't like the word green washing, but I like more the word green marketing for me. And I've got in mind, maybe you will, it's a kind of boutade in French. It's I'm referring about the Michelin Guide, you know, this red book. When you go to a restaurant and you want to be sure that you are going to eat very well, for me, the Michelin Guide remains the reference to know if a restaurant is classified and meet expectation of people. We are fond of a very good French cooking or even British cooking or maybe international cooking, okay? So that's very important. And the thing is, for me, the label, we have in France, we have the ISR label, we have in Luxembourg, the Lux Flag label. That's good, but we will have to challenge the label, okay? And that's a good question, yeah.
Okay, so somewhere to go with that as well, clearly. All right, that's great. Thank you, everybody, for taking on those questions. And coming to our final piece today with the speakers, can I come to you, Adrian, first? What advice and guidance would you offer to buy-side regulatory and data management practitioners working on ESG strategies and compliance? We've talked about a lot, but what should they take away?
Where do you begin? Okay, I would not overpromise and underdeliver. I think that it's becoming hugely important in the market to be seen to be ESG compliant. But I was I thought it was interesting when the bucketing of SFDR level 1 came out, and most funds, actually the majority, chose Article 6 over Article 8 and 9. And the reason for that, and Jean-Pierre said, the rules are not yet written, so people couldn't fully commit. What I do worry about, and I would caution against, is over committing to a higher standard of care if you can't back that up with process and data. Again, this is a science-driven agenda. It's not a marketing campaign. So I would say everybody's on a journey. People are on different journeys. And if you're at an immature stage, that's okay. Build towards a better future. The other thing I would say is it's not just a technical compliance and data thing. Be conversant. Get used to the taxonomy definitions, the language, what this really means. Run your business and your portfolios and your supply chain management to comport with these new standards. And on the last thing, obviously I'll say it here, is this, the sands are shifting on policy and regulation. The book is not yet written. It's maybe not even half written. Stay on top of industry dialogue and advocacy, because again, these rules are going to continue to change and our industry need to have a voice. Some of these things have gone too far, I'll be honest, and still need to be advocated to get a pragmatic rule set. But again, don't worry about the shifting sands. Just get involved in the conversation, because again, ESG is everywhere. It's not going anywhere. Be engaged.
Thank you, Jean-Pierre. Some words for you, words of advice.
Sorry?
Some words of advice for our audience.
Oh, advice. Take time. Take time. We won't solve the issue today. Most of us agree on the necessity to invest by taking a serious and strong account of ESG factors. However, being pragmatic, it will take time to achieve European Commission objectives, especially regarding the sustainable finance, green investment, and so on. And the mindset of people will evolve. Maybe education and increasing awareness regarding environmental impacts are also key drivers for me. But again, it will take time. We have to agree on a common definition. I'm repeating what I've said before, and clarify the standards, get the data, because the data are not available so far, and we'll see.
Okay. Vanessa, some last words from you, please.
Well, Adrian and Jean-Pierre covered many of the points I was going to make very well. I guess I would just add, I would encourage everyone to think really holistically about integration and how ESG factors can be used across the board. Clearly, you need to keep up on the regulation. I totally agree with Adrian's point, be engaged, become subject matter experts as much as possible on how things are changing, but don't just only concentrate on that. This is a movement that it's fundamentally changing the way investment strategies are positioned, and you really need to be thinking very holistically about how ESG data, however you define it, that's obviously a loose term, but how that is integrated into pretty much every part of your workflow, whether it's, portfolio construction through corporate engagement, reporting, compliance, all of these things. So just think holistically. That's where I would leave it.
Okay, that's great. Thank you very much indeed. And thank you indeed for sharing your expertise and experience. It's been a good conversation. Thank you too to FactSet for sponsoring today's webinar. If you scroll down your screens, you'll be able to see a few additional things that we have coming up at A-Team Group. And I should say that one of them is September briefing on ESG data management, a strategic imperative, which I think we've discovered is a strategic imperative, very much so today. And also on top of ESG, we're very excited because we're working on a new content service called ESG Insight, dedicated to environmental, social, and governance issues, including data sourcing, data management standards, risk, reporting, regulation, and many of the things we've talked about today. So I'm sure you're interested in this topic. We'll be here to tell you about it just as soon as we're ready, and it's coming soon. So that's it for today. So thank you again to Vanessa, Jean-Pierre, and Adrian.
Thank you, Sarah.
And thank you to all of you for watching. Please complete our feedback form, as we're always keen to improve our products and our services. So once again, thank you and goodbye.